Okay. Before we look at every other thing that has happened, right? Let's just touch what we are actually here for, right? So we're still going to be emphasizing on what we call building bias, right? Another name for it is, I don't like to use it, right? But I mean, it's still the same word. I mean, it means storyline. So we're going to talk about two things tonight with this. Okay, can somebody confirm the voice? Is my voice really low? I need um, two people to confirm. Just text, just use the chat box. Is my voice low? Nobody's responding. Okay, let's go. Just work on it from your side. I'm down for you. All right, just work on it from your side. We waited for like 5 minutes already, so let's just start. So I'm going to be talking about two things very quickly, right? That are very important, right? Um, the first one is how you can simply just build bias. I know I've been emphasizing it, right? But I think people are still struggling with it. So I'm still going to talk about it, right? Others choose to call it storyline. If you look at the screenshot I sent to the Discord server, you see that my guy who at the bottom of what he wrote like something called storyline. So the meaning of what storyline just means is it means uh, like it just talks about the directional bias from the higher time frame, right? Higher time frame bias, right? So that is what it just means. So it's just how this industry is now. People use different names, but everything still means the same thing, right? So now, if you want to build bias, right? So let's say, for example, there are only I'm going to put this demarcation here, right? Let me put this here, right? So there are only three major places, right? Let me say four, that you can build bias. But the three major areas you can build your bias is from the monthly, right? Then to the weekly, down to the daily, right? These are the three major areas that you want to build your bias from. The fourth place you can actually build bias from actually is on the 4 hours, right? So I'll tell you how you can actually work your way through. So let's say, for example, you know that actually what we want to do is that we always want to build bias on the weekly time frame because majorly most times we want to focus on the weekly expansion. We want to see where price is actually going to be running to in a week, right? In a particular week, because this monthly time frame can take approximately about 25 to 27 days to form, right? So there are two factors you want to put in place, right? So let's say, for example, this is like a weekly key level, right? And price trades to that particular key level, and um, price can actually drop, right? I've been emphasizing on stuff like this. Price can actually just drop, or price can tap into it, right? Respect a particular key level on the weekly time frame, break above it, then still come back to this particular key level, right? And price just continues to run to the upside. But whichever way it is, right? If you want to build bias on the weekly time frame, right? If you want to build bias on the higher time frame, which is called another word for it is called storyline. One of the things there are two factors that needs to be put in place. Once those two factors are not there, right, you don't have a storyline. You don't have an higher time frame bias, right? Those two factors must be met if you are going to have a bias, right? Please turn off your video. I don't know who that is. Just help us turn off your video, right? There's no point. It slows the network bandwidth. Just I'm trying to turn off somebody's video. Okay. So there are two factors that needs to be put in place if you are going to have an higher time frame directional bias, right? And if you are going to trade in that directional bias, the first one is if, for example, this is a weekly key level here, right? This line, this horizontal line that we have here, or is it a vertical line? I don't know, right? Let's say this is a weekly key level, right? One of the things you want to see, right? The first factors you want to put into consideration is that after price taps into the particular key level on the weekly time frame, you want to see that, I've been emphasizing something on candle closures, right? So price taps into the particular weekly price taps into this particular weekly price taps into this particular weekly key level, right? So on the weekly time frame, there's one thing we want to see. The first factor we want to see to be able to know that price is actually going to go into that directional into our anticipated directional bias. There are two factors involved. The first one we want to see is that number one, price must tap into a particular weekly key level, right? The two weekly key levels that we can actually see price tap into is we can have either the A shape or the V shape key level, or we can also have the open close, what we call the open close, where two consecutive candles, the open and the close are actually overlapping with each other, right? So those are like the major two areas. So when you come every week, at the end of every week, right, you're coming into a new week. One of the things you want to always pay attention to is on the weekly time frame, right? You want to see price on the weekly tap into a weekly key level, right? The first factor is that the price starts into a particular weekly key level and it must close below. right? Which means that after it taps into a particular weak key level, now let's say this is for a bearish directional bias, right? So it is a bearish directional bias, meaning price will expect price to go to the downside. So if price taps into a particular weekly key level, either the open close or the V-shaped key level, right, on the weekly time frame, the first factor we put into consideration is that price must reject and close below that particular key level, right? That is the number one factor. Then the second factor that must be in place, right? Now, these two factors are not mutually exclusive. What I mean is that uh, they, if you don't have, if one is there and the other is missing, you don't have a directional bias, you don't have a storyline, right? So the two of them must actually be here, right? So let's say on the weekly time frame, for example, we have tapped into a key level, then we have closed below. Then the next thing you want to do is that after the weekly time frame has closed below, right? The next thing you want to do is you want to move. This place represents the weekly, right? The next thing you want to do is you want to move one time frame lower, which means that you are going to the daily time frame. So what the daily time frame is going to do for you is that the daily time frame is going to give to you a confirmation that we are going to the downside, right? And how do we get that confirmation? Price actually sweeps liquidity and then price breaks structure. Many a times, right? Price doesn't actually have to sweep liquidity, and I've told us that on a daily you can see what we call like an engulfing, right? What price is going to do is going to engulf the previous on the daily time frame. Price is going to engulf the previous daily candle, and after it engulfs the previous daily candle, you see many times that the next daily candle that is going to be created is going to serve as an inducement liquidity close to this key level, right? So we expect that price will take our previous daily high, come to this daily key level that has been created, and price continues to move to the downside. So don't forget, you started doing your bias from the weekly time frame, and the first factor you must put into consideration is that the weekly must tap into the weekly key level, then it must close below. Then you go one time frame lower, right? The moment you go one time frame lower, you want to see the daily do two things, right? Sweep of liquidity or break of structure, or the daily is going to engulf the previous daily candle. Then the next daily candle is going to serve as your inducement liquidity, right? So if you remember the forms of liquidity, we said that the previous daily high can serve as a form of liquidity. So if price takes out the previous daily high, comes to a daily key level, where is your nearest drawn liquidity? The nearest drawn liquidity is going to be the what? The previous daily low, right? So many a times, I don't want us to get used to the word break of structure, right? And whenever we are confirming the directional bias. So we know that the first factor we must put in place is that if the weekly rejects on the weekly key level and closes below, then we go one time frame lower to the daily time frame to see what we call either a break of structure or a breakout. So what I mean by breakout is that price might be just going maybe on to the buy side, right? Then it breaks below this particular low, right? So sometimes you might not see like a sweep of liquidity, you just see that price is going to break below it, right? And many times you see that that breakout that happens is always going to be in form of this engulfing. So you can see that, if you are building bias from the weekly time frame. So how do you frame your setups, right? So you begin to frame your setups this way that at the end of every week, coming into every new week, you are starting from the weekly candle to be able to see, right? You can go through all the peers, right? And look for from the weekly time frame, you take your time and say, okay, where did the weekly time frame close, right? Let's say it tapped into a particular weekly key level, right? And it closed below, right? Then the next thing is that you are going to the daily time frame, you're only waiting for a confirmation of that directional bias, right? So those two factors must actually align for you to be able to have a bearish storyline or a bearish directional bias, right? So the next thing you want to be waiting for is that every trade you want to be taking all through that week, right? From Monday to Thursday, because Friday is likely going to give to you a reversal, right? From Monday to Thursday, every trade you want to be looking for, right, should be in the direction of that bearish bias that you have built on the weekly time frame. So everybody who remembers that, you remember that on the monthly time frame, the same way it is on the weekly is the same way it is on the monthly as well, right? So you remember when we came into the new month, when we had our first call, right, during, I think, in a new month, right, we saw how we took out the previous monthly high, then we tapped into a monthly candle, we closed below, right? After we closed below on the monthly time frame, we moved one time frame lower, and the weekly time frame was what confirmed our directional bias for us, right? So we moved one time frame lower. That is for G, right? I'm referring to G, right? So the first factor was actually considered, and the second factor was that we moved one time frame lower to the weekly time frame to confirm this our monthly directional bias, right? And we were anticipating that weekly was going to break out, give to us like a liquidity sweep or break of structure, or a break below that low, right? That confirms that we're just going to be selling. So the moment we had the weekly bias confirmed that we're going to be selling, every of our trade idea was in alignment with the monthly and the weekly time frame, right? We don't want to go again. Even if you remember one of the news we had, I think the first CPI or FOMC, you would see that price went in the direction of the higher time frame bias, right? So that is one thing that you will notice that price did. So on the monthly time frame, the two factors actually still stand, right? You want to see the monthly time frame tap into a monthly key level, right? It could be an open close or a V shape, okay, an A shape key level, right? But then the next thing you want to see is that it doesn't just have to tap into it, it must close below it, right? If it closes below it, then you have to move one time frame lower from the monthly time frame and go straight to the weekly, right? It is a weekly that helps you to confirm your directional bias for the monthly, right? So if you are building bias from the weekly, you have to move one time frame lower to the daily, right? So daily is what confirms the directional bias for you, right, on the weekly. If you're building your directional bias on the daily, right? So let's say all of this that is happening here. So let's say all of this that is happening here is actually happening on the daily time frame, right? So on the daily time frame, don't forget we're still trying to build like a bearish bias. So on the daily time frame, price is actually has actually tapped into a daily key level and it has closed below, which means that the first factor has actually been satisfied. The second factor is now that we have to confirm our directional bias by doing what we want to scale one time frame lower, right? Moving one time frame lower means that we are going from the daily to the 4 hours, right? And what do we want to see the 4 hours do? We want to see the 4 hours actually give to us a sweep of liquidity and a break of structure, or the 4 hours will give to us like an engulfing, which we call like a breakout, right? Which means it breaks below the previous low, right? The moment we have all of this happen on the low 4 hours time frame, we can confirm that that daily time frame we're going to continue to sell, right? So the reason why I said the three major areas we are going to be able to build bias from is from the monthly to the weekly to the daily. The 4 hours also you can build bias is just for like a day trading stuff. Maybe price taps into a 4 hours key level, right? Let's say we have a key level like this, price taps into the 4 hours key level and it closes above it, right? The next thing you want to see is that you are moving one time frame lower to the 1 hour time frame. What the 1 hour time frame is going to do for you is still the same thing. You want to see a sweep of liquidity and a break of structure. Then you want to see price play out from one of those key levels, and your targets must be ideal, right? Your targets must be ideal, right? Meaning that you are going to play, because you are building bias from the 4 hours, so you're going to play your entry on the 1 hour time frame, right? And you're targeting the external range liquidity. It's not like you are holding the trade for a very long time. And the reason is because you are actually you are building your bias from a very much lower time frame, right? So that is what it means, right? So if you look at those are the two major factors that you need to be that needs to be in place, right, for you to be able to build bias. So the moment you get your bias right, maybe you just need like two time frames, right? If you are working on the daily, you need 4 hours for confirmation. If you're working on the weekly, you need daily for confirmation, and you just want to be looking for selling opportunities or buying opportunities in respect to that higher time frame bias that we have been able to build. Let's say, for example, we've been able to come up with a bearish storyline or a bearish bias on the higher time frame, right? So the moments we are seeing all of this, we know that every time we wake up all through that week, the only thing we are looking for is that we want to see price actually take out the next inducement liquidity. Don't forget, this could be Asian high and low, right? We want to see price take out Asian high, tap into a particular key level, right? It doesn't have to be Asian high, right? You tap into a particular key level, and we just want to continue to sell like that. We'll come the next day again, we want to see London might just give to us that manipulation expansion. Then overall, we're going to see price again, tap into a particular 4 hours key level, and price will continue to move to the downside, right? So the moment you have like your weekly bias, right, everything you want to be doing in that regard, right, must be, or what is going to frame your setup all through that week, right, must be in alignment with what you have been able to come up with. So there's something else I want to talk about. So for example, sometimes, let me quickly say this, right, because it's always very important. Because sometimes people can have issues with being able to identify which direction to follow. So for example, sometimes let's say you have I want to show you something. Let's say you have a particular key level like this. You have like an engulfing on the daily time frame, right? Let's say you have, I'm trying to come up with something now. Okay, yes. Let's say you have like an A-shaped key level that is resting on the daily time frame, right? Sorry, it's not going to be picture perfect, but just get my point, right? So you have an A-shaped key level here. You also have an open close key level. Don't forget this is the daily time frame. So this particular daily candle engulfed this one, right? We engulfed this one. So we have an open close here on the daily. We also have an A-shaped key level. So let's say, for example, price taps into this particular daily key level, right? And it sells down, right? And taps into this particular open close. And both of them begins to reject. So you have this one that tapped here, close below, tap this one again, tap this open close, and it also closed above. So the question is, we now begin to wonder where exactly is price going to move, right? So it's simple. The simple answer to that question is that as much as price has rejected from two particular key levels, sometimes there are even times the price will actually react from two key levels, right? Price will react from an A shape and also react from a V shape, right? It will react from both areas, right? It's going to react from both areas. Let's say on the daily time frame, price will react from both the A shape and the V shape key levels, right? So the question is, which area are we not going to be able to pay attention? So if this is a daily time frame, all we just have to do is that we are scaling to one time frame lower, which means that we are going to the 4 hours, and we are looking for the place, the direction where we have the break. So if price taps into this particular A-shaped key level, then it taps into this particular open close, right? And if on the 4 hours time frame we move one time frame lower, and on the 4 hours time frame we see that the break, right, or the engulfing or the break was on the 4 hours to the upside, it means that we are only going to be looking for buying opportunities, right, until all of these highs are taken. Don't forget we are reacting from two major areas, right? So, but the area that it might look confusing sometimes because you're looking like, oh, price is reacting from an open close. Price is also reacting from an H8 key level on the daily, right? Where am I going to play, right? You don't have to stress. Just move on time frame lower, go to the 4 hours time frame. Look to the area that we have the break. If, for example, the break on the 4 hours is to the downside, right? You have this, like you have this to the downside of the 4 hours, or you have on the 4 hours, you have something like an engulfing, right? So just focus on the sales, right? Focus on the sales. You can wait for the next 1 hour candle to create an inducement for you and price. You can just join them to sell down all of those things, right? So whenever you have price reacting from two major areas on the daily time frame, right? One of the things you want to do is move one time frame lower to 4 hours, right? And then look for the area that you have the breakouts or the breakout structure or the engulfing and follow price in that particular direction, right? So now, if you look at monthly time frame, let's quickly now jump into the chart. I don't know. This is okay. Still, there's still time. This is like 10, almost 10, right? So in case we don't cover the second part I want to talk about, we'll have to share another link again, right? So like I said, if you know you're tired, you can go to bed, you catch up with the recording, right? So if you look at this way, we started talking about how many of us remember this monthly time frame, right? This is for April. Price as not even we knew that price is going to sell from this particular area down. But if you remember, this was a previous monthly high that we had here, right? We had this previous monthly high, and we also had, if you remember again, when we're looking at this on our live session, right? So you see, we spoke about how price reacted from this particular monthly key level, right? And if you remember again, I told us that this particular monthly low, right, for this particular monthly low is for December, was going to serve as inducement liquidity. And the beautiful thing is that it is resting very close to this particular V-shaped key level that is overlapping with this imbalance that is resting in, right? So you can see, remember, you can see prices. This is the key level here on the monthly time frame, right? And you can see how it is still holding this key level here that is overlapping with this particular imbalance that is resting here, right? So you can see how it is still holding, right? Remember how we called all of this from here down? I mean, this is like almost like a 2 weeks sales, right? So, and we're only looking for sales in this direction because we said that all of these lows, right? Remember range cycle theory. I said that all of these monthly lows were going to serve as inducement liquidity, right? That would attract price to the downside. So you can see we're still on this monthly key level that is overlapping with this imbalance, right? So one of the things we want to see is that we are still very much bearish, right? The reason why we're still very much bearish is because we still have this particular key level that is resting here. We also still have this open close that is also resting here, right? So in case price wants to go down, right? But if price wants to change its momentum to the upside, it's simple. We're just going to wait for the weekly time frame to show us the direction that, okay, we have been able to confirm the monthly directional bias that we're going to continue to move to the upside, right? So, but a weekly does not give to us a confirmation. We are just going to be looking for more sales, more sales, more sales. In fact, we can look for more sales to this particular point. So you can see this A-shaped key level that is resting here, right? All of this A-shaped key level that is resting here, right? And the beautiful thing is that you can see that we have this particular inducement liquidity that is also resting here. So in case the weekly time frame does not give to us like a confirmation of a bullish bias, we can just continue to look for sales to this point, right? Right? So, but once the weekly gives us a bias, like a directional bias, right? That's a confirmation for a change in bias. We're gonna go with a bias. So now, if you look at all of the sales that has been happening here, I mean, even this week, I mean, I was just particular about the sales, right? Today was very slow. I mean, GU tested a lot of people's patience. If you were on that buy and that sale that happened today, it tested. I was just checking I was like, this thing should have moved. This thing should have moved, right? But if you move to the 2 hours time frame, let's just check all of the sales that has been happening, right? All of these sales that have been happening. So you can see the first sale that has, okay, we know that the first sale that happened was from here. We took out external range liquidity, played out from this particular key level. We remember all of this trade, right? So now, if you look at this particular week, right? Today's Wednesday, right? If you look at this particular week, let me show something on the 1 hour time frame, right? So, okay, yes, on the 1 hour time, yeah. I've seen that was for yesterday's trade. Somebody wanted me to talk about it with him, right? So if you look at all of this that is actually happening, right? So the first thing first that even makes you still look for more sales is that if you look at what happened here, you can see how we broke below this low. This is not a week. We didn't sweep liquidity here. We broke below that low, right? So to be sure that we broke below that low, we can go straight to the 4 hours again to see, right? You see that we broke below the low as a body here. We broke below it as a body. We still broke below it as a week, right? So, but if you move to the line chart, you will see the break. This was the break. So the break is to the downside. You can see this breakout here is to the downside, which means that ideally we should only be looking for sales, right? So that was even the first thing, coupled with the fact that we have that, what do they call it now? The monthly bias in mind. So this was my sales for yesterday, right? So look at this. Good. So look at from here first. I want to show you. You can see how price reacted from this open close. right? Price reacted from this open close. What was your confirmation entry? We engulfed, took out this previous 1 hour candle high, and where did the sell happen from? Here. The sell happened from here, right? This particular key level here. The sell happened from here, and we went straight to this particular low, right? So you can see where we came from. We came from this open close first, engulfed. The moment we engulfed, it gave to us like a confirmation entry. Played this particular key level after engulfing. We dropped. In fact, only this drop alone was enough, right? But we overall we went straight to this particular low. So, but yesterday, now look at what happened yesterday. If you look at what happened yesterday, because of how messy this chart is, right? So you will see that this was like where I marked out as the adjustment liquidity, right? The reason was because it was resting close to this particular open close again, right? So you can see this open close that is resting here, this one, right? We have that open close that is actually resting there. So the next thing price did was that the same way we had price react from here, right? We tapped into this particular open close, engulfed, came back to this key level, we dropped, right? So ideally, oh God, after we took out external range liquidity, did you see how we bounced back again? So which means that this is why having your ideal target makes a lot of sense. So you can see this particular low that we have here, right? Now, this particular low that we have here becomes our next external range liquidity. But because of how messy this chart is, the best thing was just to wait for confirmation entry, something like this. Engulf, price taps into a particular key level, engulfs, play out the key level, right? You can see that's an A-shaped key level, very sharp, right? Tapped into it, and price dumped. So we have this inducement liquidity that is close to this open close. Price tapped into it. What did it do again? The same price action we had here was what we had here again. What did price do? Price tapped into the open close after taking out the inducement liquidity. It engulfed again. After engulfing, where did price sell from? Right? Look at this. The key level again. Price sold out from the key level, and it was straight up. We sold from this key level. So my sales was from this place here. My stop loss was just a little bit above this particular high, right? From here. So we are moving from, since we have taken internal here, so I did target should be external. And you can see the moment we took out external, you can see how we started to reverse, right? So all of these ones now the chart is becoming messy, right? So all of this happened during London. I think, yeah, during London. In fact, it happened during London. So if you look at where price, I'm trying to figure out, I don't even want 50 minutes time on my chat set. I didn't use it again. Right, so trying to figure out where this guy is bought from, right? But we're not going to waste time with that. Okay. So if you look at all of these buys, right, on the 1 hour time frame, you can see we took out Asian low. I didn't know where all of these ones happened from. So the moment we bought in London, I just knew that monthly is still very much bearish. Weekly has not even given to us like a sign that we want to be bullish. So any buy now is just short term. Do you understand? Right. So the best way to just confirm, right, to just have the best entry, right, as possible. Look at this. So what I did was I took 2 positions today. In fact, the third position that GU gave, I was honestly looking at it to take like another entry, but I was also skeptical, right? So look at this on the 4 hours time frame. Don't forget we are broken below this low. So what do we have? We have our A leg, B leg, which is our inducement liquidity that is resting here. So where did price react from again? Open close, right? Price reacted from the open close. But if you move to the line chart, we have a V-shape, A-shape key level here, right? Where the price tapped into it, right? So I think this was the exact spot Sylvester called for us on the Discord server this morning. This was the exact spot he called. So that was like a 0 drawdown trade, right? So tapped into it. So for me, I wasn't looking at that. I was looking at this open close key level here. So if you scale down to the 1 hour time frame, you see where my entry was. So this was where my entry was. So my entry was here, right? So if you look at here, we have the inducement liquidity. So you can see that 4 hour, as messy as the 1 hour time frame looks, 4 hour give it a lot of sense, right? You become even more confident because you are coming from the higher time frame. So if you look at all of this here, we had this key level that is resting here, so which is also in line with the 4 hours key level, right? So look at what happened. So this was my entry. Yeah, quite a risky one because price did not engulf. I just knew that okay, we have tapped into this key level, right? And we tapped into the key level, we closed below it, right? So the moment, if you move to the line chart, you will see this particular key level that was created here, right? This particular key level that was created here was my entry. So if you look at the Discord server where I shared my chat, right, you will know that this was where my entry was. So this was my first entry here, right? Tapped into it. My stop loss was like a 12 pip stops, right? 11 or 12 pips, right? So very close to my stop. I didn't get in. It started to drop. So the moment it started to drop, it tapped again into this same 4 hour open close, close below it. Look at what price did again. If you move to the line chart, right? If you move to that line chart, you can see the A-shaped key level that we have here, right? You can see again, that was like the second entry after this first one. We have this one tapped into it, it dropped. So where did I get my second entry from? Why did I take the second one? My second entry was now more logical, right? So if you look to the 1 hour time frame, this was where my second entry was. Knowing fully well that we have played out this key level here, right? knowing fully well that we have been able to play out this key level, right? I do not expect price to come there, but there are times that price can come back there, right, and still drop. So my eye was on this open close, right? Remember what I told us about the next 1 hour candle or 4 hours of daily serving as inducement liquidity. So this 1 hour candle here that did not tap into this particular key level was what served as my this one was what served as my inducement liquidity. So my second entry was at this open close. My stop loss was just here, right? And did you notice something again? We tapped into the open close, we closed below it. After we closed below it, we had an engulfing here, right? You can see how this particular candle engulfed. If you move to the line chart after the engulfing, what did you find? You can find this, right? Can you see this key level here that is resting here? So where did price tap into? Tap into this particular. This was like the third entry again. This was the third entry I was talking about, but I didn't take it. So my first entry was here, my second entry was here. This was the third entry, and price just dropped. So where did price drop and reverse to? Move to the line chart again. As messy as all of these candlesticks looks like, move to the line chart. What can you find? We have this QMR key level here, right? Simple. We tapped into the QMR key level, right? Tapped into the QMR key level, and we started to reverse. But anybody who took a trade from here, 1 2 3 1 2 4, you are out already, right? So if you are still greedy, still waiting for the low to be taken, right? That's on you, right? That's on you. So you can see all of this, right? So we're just looking to sell in this same direction. All of this was just in this same direction. All of this was in this same direction, right? Okay, so what we're going to do is the second thing I want to talk about. So this is already after 10, but max by 10, 20, 10, 30, we're going to be done. So I'm going to send another link to cover one more thing, right? So, well, if you are tired, you don't have to join, right? You can go to bed. So you'll see that all of our sales was just in direction of this monthly and weekly time frame, right? So it makes a lot of sense that we can actually just be patient enough. So you can see monthly, weekly is giving to us a sweep. We have broken again. So you can see that weekly is still very much bearish, right? You can see we are coming, don't forget we're coming from the monthly, right? So we swept this weekly high, right? And you can see what we did here already. We have already broken below this low, right? So on the weekly time frame, we have broken below this low. So we are still heavily bearish until we see a clear sign that we want to be bullish, right? Are we saying we're just going to be selling? No, that's not what I'm saying, right? This place looks like an ideal place that price can run into, right? Yeah, like this. So are we saying we are not going to buy? No, that's not what I'm saying. We have taken out the previous weekly low, and it looks like we might close above, right? So what we can actually see is that price is going to likely run to this particular, might just do something like this. Might just have this particular buy from this key level, sell, then give to us a buy bias and continue to buy from there, right? So this is how you'll be able to blend time frames together, right? Being able to wait. And you can see I've also made mention of just, confirmation entries, price taps into the key level. You wait for it to engulf. The next candle creates or serves as inducement liquidity after your key level has been created. And price just continues to run to the downside, right? So if you look at NAS, okay, I think I'll look at NAS on the next link, right? So we have about 15 people on the call, right? So this is not a public call, this is a private call, right? So we can't share everything to the public. So what I'm going to do is I'm going to stop recording right now so that this one can start converting, so that I can share it with us the moment we are done with the last class for tonight.